I want to start off by talking about the markets. Volatility has crept back into the picture. Wall Street has suffered, obviously, some very heavy losses in just a short period of time in reaction to the Trump tariffs. There's been some bounce back, of course. And it might be difficult for people to not look at their retirement accounts to see evidence of the roller coasters, the ups and the downs. But there are studies that say doing that too often, quite frankly, it's not good. So is there a happy medium here, a Goldilocks approach, not too much, not too little? What should people keep in mind about their investments during these turbulent times?
Yeah, I mean, I think in the current environment that we're in, you have news everywhere. You have it on your cell phone, you have it on the radio, you have it on the TV. I mean, everywhere you look, there's news about what's going on. So it's hard to completely pull yourself away from what's going on. But at the same time, looking at it every night before you go to bed is probably not the best thing to do. I mean, if you want to get some sleep and be productive the next day, I would say don't look at it as much. I mean, history has repeated itself time and time again. We know that there is a drop in the market every 2 years, and then every 7 years, there's, I don't want to say a crash, but a dip below 30% or above 30%. So we know this is coming, but really with planning, that helps to ensure that when there is a dip, that you don't have to freak out. And Lawrence, I don't know if you've had anything to add to that.
Yeah, I mean, I think the biggest thing is how do you have your portfolio set up? What buckets do you have set up for yourself in retirement? Because what we see is with a lot of our clients here at ProStatus, you're 3 to 5 years away from retirement, or you're actually in retirement. So you have a lot shorter of a runway to bounce back from these downturns in the market. So what happens is we want to look at how do we set up certain buckets to where you're not as concerned to what's happening in the market. Obviously, if the market goes up, you're very happy. If the market goes down, you're not happy. But really, what can we control, right? So we want to set up buckets, right? We want a bucket that's set up for income. That way, if the market does go up, our lifestyle is great. We're still making the money we need in retirement. But if the market goes down, our lifestyle is still the same, right? Our lifestyle is not changing. We're not having to go back to work. We're not having to eat ramen noodles now. We're still maintaining the lifestyle that we wanted to live in retirement because we've set up the proper buckets and we've done proper planning for our overall portfolio. So we want to make sure that that income bucket is set up properly first. So, right, what income do we have coming in? Social Security, rental income? Do we have a pension, or do we need to set up our own private pension so that we do have that money coming in regardless of what happens, right? That's the biggest thing, is regardless of what's happening in the market, I have my money on a monthly basis coming into me consistently. And then with the other bucket of money, we can decide how risky do we want to be? Do we want to be super risky with that money, or do we want to be conservative? At that point, it's really, what you can handle, what you can sleep at night with. Because again, if the market goes up, great. If the market goes down, not so happy, but my lifestyle is not changing. I'm okay regardless of what happens with that market volatility because I've done proper planning and I've set up the proper buckets for my retirement.
I just want to go on the record there and say that I actually did have ramen noodles the other day. Not out of necessity. It's just kind of a, that comfort meal from earlier times. But yeah, you don't want that to be the entirety of your diet in retirement. That's going to have health implications and other things. How difficult is it to make new clients or existing clients understand that it is not an all or nothing strategy? These different buckets, there is money where you can very much still think like a younger investor and say, there's an opportunity here to grow. But at the same time, you don't want to swing for the fences. You don't want that to be the entirety because, as you said, ups and downs, you never really know when the bottom is. Even if you go in right now, it could go lower, and then that could be devastating. How tricky is it to make people understand that?
Yeah, I mean, it's not too tricky because really it's part of our process. When what happens when a radio caller calls in, they have an initial conversation with us where we're getting to know you. We're asking a lot of initial questions to get to know, what are your goals in retirement? When do you plan on retiring? What type of income do you have, coming into you for retirement? Do you have secured buckets of income coming in? What does that lifestyle look like for you? So we're getting an idea of what that picture might look like. And then we're able to discuss, okay, you need this amount of income. How do we set that up for you, right? Are we using a dividend producing portfolio? Are we using an all equity portfolio of preferred stocks? Or do we need to go out and buy your private pension, right? And buying your private pension, a lot of times what that looks like is using an annuity, right? How do we use the least amount of your money possible to generate the income you need in retirement so that it's secured, right? The main goal when it comes to retirement planning is making sure that we have that income secured for you. Mm-hmm. That way, everything else else is really just extra. You need a new roof, you need a new car, you're going on a huge vacation. That's just extra that you can pull from that extra money you have because we've secured that income bucket. So once they understand that we're breaking this into certain buckets of money based on what your goals are, clients or radio callers really understand that I can set up different portfolios. I can set up different buckets, and we can use different segments of our money to accomplish those goals, and that there's way to do that so that I don't have to worry about exactly what the market is doing on a day basis because I have someone in my corner looking out for me.
And I have to imagine in the past couple of weeks, in light of all the volatility, you guys have been getting calls, again, from the radio or just clients that you have existing right now. What do those look like? And is there a difference in the concern that clients have versus people that are just calling in who are prospective that are, maybe just a bit worried with the volatility?
Yeah, I mean, there's definitely a difference. I have an example. We had a client that came in 6 months ago, he had retired, had his 401k rolled over to an IRA, and it was all invested in technology stocks. So no diversification. Came in because his whole goal was that he wanted to have enough money in retirement. We sat him down and we explained the 3-bucket strategy that Lawrence was talking about. And we showed him, you don't need to take this much risk. Based on the income that you already have coming in, there's only a little bit of gap we need to fill, which we were able to do, take some of the money, put it into an income producing annuity. And all of those other assets were really just there to do extra fun stuff. So even if the market did drop, mind you, we did diversify him and reduce his risk because he was scared, and thank God we did. But really, what his goals were, we were able to fill with income, and the rest was just fun money. So because of that, we don't get so many calls when there's drops like this because of the way that we have planned. Is most of our clients already know, based on the income that they're receiving or the income they're going to receive from these income producing strategies, they're going to be fine. Are they still scared? Absolutely. But vice versa, we have a ton of prospects that are calling us, again, because every day they're getting different news of tariffs, the markets, all this stuff. But once we have them come in and we show them their plan and show them the recommendations, it's a totally different conversation.
And again, that all starts by reaching out and setting up a time to speak with them. 866-597-1040. You don't necessarily, I mentioned the Goldilocks approach earlier. You don't want to be too aggressive if that's not what you're comfortable with. You don't want to have money, buried in your backyard, because obviously interest rates and things like that is going to reduce the buying power. Finding what's going to work out just right for you starts with setting up a time to speak with the team at ProStatus Financial. Lawrence, Samantha, the entire team, happy to sit down with you. Starts with that portfolio analysis. Perhaps you're taking more risk than you thought you were, because in the past couple of years, it's been pretty easy to say, yeah, I'm fine with it because the markets weren't having those hiccups. But now that they are more prominent, now that we are all closer to retirement, great time to take a look and find a way to make those moves. 866-597-1040, or go online to the website. Again, thesavvyinvestorradio.com. Click on that 401k X-ray button, front page, schedule that 15-minute conversation today. Thesavvyinvestorradio.com.